Welcome to Bizworld. I'm Adrian Seet. The country's economy remains resilient and will continue to be supportive moving into 2024, anchored by domestic activities. Bank Negara Governor Dato' Abdul Rashid Ghaffur said the labour market conditions, particularly employment and wages, have continued to improve, supporting households' ability to spend.
Investment by both the private and public sector remains forthcoming. These factors will continue to support the Malaysian economy in 2024. In addition, the economy will also benefit from a gradual recovery in the tech cycle and rebound in external demand.
He added, Malaysia fortunately does not face a severe inflation challenge such as in other economies, and core inflation has continued to ease to 2.5% in August this year. The central bank expects inflation to continue to trend lower in line with slowing momentum of price increases. However, Bank Negara will continue to monitor potential risks to its outlook arising mainly from changes to domestic policy on fuel subsidies. Meanwhile, Bank Negara Malaysia has overtaken the government as the top bond issuer in the country during the third quarter of the year. According to data from bond pricing agency Malaysia Sdn Bhd, the central bank made 74.5 billion ringgit worth of issuances in the 3-month period ended September 30th this year. Nonetheless, the most traded bonds in the country were those issued by Putrajaya, with a total traded value amounting to 216.53 billion ringgit in the third quarter. The biggest corporate bond issuer for the period was Cagamas Berhad, that issued almost 3 billion ringgit worth of debt papers. Meanwhile, Lembaga Pembiayaan Perumahan Sektor Awam was the largest sukuk issuer, raising 4 billion ringgit during the quarter under review. The Islamic capital market needs to be scaled up as it has the potential to play a larger role in financing sustainable development projects globally. Securities Commission Chairman Dato' Sri Awang Adik Hussein said this via facilitative frameworks and active partnerships amongst like-minded parties, which would develop and accelerate innovation in the area of sustainability.
Now is the moment for us to capitalize on the close alignment between Sharia principles and sustainability. As we know, both offers cross-leveraging opportunities to benefit from each other's strengths to better address global sustainability issues.
According to Awang, Malaysia ranked 78th in the United Nations SDG 2023 report. The country also scored 69.85%, which is slightly higher than the regional average of 67.2%. However, only 36.6% of Malaysia's SDG targets have been met, or are on track, with the remaining 63.4% showing limited progress or even worsening. Malaysia Airports Holdings Berhad, MAHB, has continued to record over 11 million passenger movements for the second consecutive month in August as its network of airports in Malaysia and Turkey. Malaysia accounted for more than 66% of the total 11.2 million passengers, while its Turkey operations registered 3.8 million passengers movements. August also saw the highest average total daily passenger movements for the year to date at 240,000 passengers. This was partly driven by the 6 state elections, the extra public holiday, and the National Day celebrations that coincided with the school holidays. More airlines have also restructured their routes, with available active fleets that are in operation, resulting in more flights to the Northeast Asia region, as well as the resumption of routes to pre-pandemic destinations. Emerging economies, including Malaysia, need much more private financing for climate transition. According to the International Monetary Fund, IMF, achieving the transition to net zero submissions and emissions by 2050 requires substantial climate mitigation investment in emerging market and developing economies, which currently emit around 2/3 of greenhouse gases. These countries will need about $2 trillion annually by 2030 to reach that ambitious goal, with the majority of that funding flowing into the energy industry. This is a five-fold increase from the current $400 billion of climate investments planned over the next 7 years. And that's all the time we have for Bizworld. I'm Adrian Seet. Thank you for investing your time with us, and stay tuned.